What's up guys, this is Trader CJ. Here we have a simplified ICT strategy. Show you guys. So first of all, we look at the 3 AM to 4 AM time zone. So when you open your chart, you can see the market is either trading up or down. So I want to show you an example. So here we go, the market goes up in that time zone. It forms a bit of a high, and now the market is pulling back in that. We still end at 3 AM to 4 AM time zone. Then we get a bit of this pullback and a bounce back upwards. So either the market is going to break higher and still continue the trend, or it's going to pause a bit below this low here. So that's what we look for. We need a market structure shift. So let's say the market is pausing there. So this level here needs to break lower to actually see if the market is turning down and trying to go in a downtrend. So because if we still look at this, it is in an uptrend. So there's no way we're gonna try to short it on this structure, because it's just can continue higher like that and continue the trend upwards. So right, so that's the first thing we need to look at. So that's the marker MSS, market structure shift level, basically. So the market's going to do, for example, going to do this. It breaks that level. So now it is trying to go lower. So we look at that and we see, okay, great, broke the market structure shift. Now we look for usually this level, this candle that formed here, this break lower, is forming a fair value gap. So let's say, for example, that fair value gap forms here. Now we look for a entry. Let's just delete that line for you guys. So that's the fair value gap, for example. Now we wait for the market to pull into that fair value gap. On that 50% of that fair value gap, we enter short. Okay, so it's gonna look like this. So we go short there, put your stop loss above this fair value gap candle. So put it above there, and we target a 1 to 2. That's the one option. Or we look for a liquidity level down below. So for example, if the market turned down here, that formed a specific level, a support level. Let's say, for example, it was something like this, and like that. So this might be a level that formed. So we can always target this level here. But a nice thing to do is go for your 1 to 2, then scale out 50 to 75% of your position, your contracts, and then try to target a higher target or a next level liquidity level, and scale out the rest of your position on that. Right, so I'm going to jump into an example for you guys in the next one, and we can look at it, what happened with the market. Right guys, hope this helps. Trying to find a trade within that time zone in the London session, ICT's concept. I'm trying to simplify it a lot. It helps, and some guys put their stop losses, for example, just above that fair value gap, but I know the Nasdaq might be a bit choppy and sometimes it spikes through and just tags your stop loss, and it goes into in your favor. So right, before we jump into the live example, currently TakeProfitTrader has a 15% sale running. Get funded within 5 days. Just check out the links in the description below. Also, Funded Trading Plus has got a 10% sale, so also the links are in the description below. Right, let's jump into the example from today. So first of all, it's the 5-minute chart. It is the NQ, and we are currently just past the 4 AM time zone. So between 3 AM and 4 AM, we look for that, first of all, that trend. The market had this trend, an upwards trend from this morning. I just want to show you guys like this. So this whole early morning, the market, the Asian session, the market went up. Right. Then, so on this, between this 3 AM session, we start to look for a position. I want to show you guys what happened here. So the market opened, went lower, and then bounced back upwards. So it went up like this for the high. Then after that, it pulled back, trying to break a new high there. Failed to do so. Then the next one is this break of the structure. So this level here, this low of this candle, was the market structure shift. So on this big candle, it went lower, it formed a fair value gap. So the fair value gap formed here, right there. 1, 2, 3 candles. This big candle formed. Now we look for the entry, 50% of this fair value gap. So as soon as it formed, you can put your order there with your stop loss above that candle there. And then targeting a 1, 2, 2. So it's going to be this area here, 15 points on the Nasdaq. And you got your level. So just want to draw in these levels as well. Liquidity level here, a low here, it's got another low liquidity. So you can, for example, scale out most of your contracts. You can scale out here, targeting this level here, and targeting the next level here, which is way more than a 1 to 2, 1 to 4, and a 1 to almost 5, 1 to 5 risk reward. Alright guys, I hope this helps. Don't try and look for trades after the 4 AM. The market is usually in a trend, so now it gets closer to lunchtime in the London time zone, so just be careful.